Hello again, all my Massachusetts home buying and selling brethren. This is your real estate enabler, Dan Bernal, and today I am coming to you from the road from I'm about to head into a home inspection for a 3-family property that one of my investors is buying, and I wanted to use this as a way to kick off a series of video blogs I want to do really geared towards investors. I work with probably more than half my clientele are investors, and there are lots of different ways to invest in real estate, depending on what your goals are. And so I wanted to sort of lay out some of the broader, what I'm going to call strategies or styles for investment, so that you can get an idea of really what's possible, because there is no one way to do this. And anytime I'm working with someone, we're going to look at what your goals are, what your available assets are, what level of involvement you want to have, and that's really going to guide what strategy we put together for you. So, the first one is starting very low, and this is, many people don't know that you can use a residential mortgage to buy an investment property with 25% down. So if you don't want to take your whole 401k and turn that into real estate investments, with a relatively limited down payment, you can buy a non-owner occupied property, anywhere from a single family house up to 4 units. And that gets you in at prevailing residential rates, which are still very low, generally under 4%, and with a fairly low impact as far as your down payment, and it's going to start producing a monthly return for you. Now, if you're looking for lower priced property, if you really don't want to risk too much money up front, you're also going to find that you're going to grow less equity usually in those properties. Areas that are not booming or blossoming tend to be lower priced as far as what you're going to pay for the property. You're also not going to get that much out of the property later on, so what you're really looking at for that kind of investment is just the monthly return. So what you want to start digging around for in those situations is lower and lower mid-income areas that produce good rent. There are a lot of these around the state, and in some areas, as long as you can find an area that's not really declining as far as values go, you can get in with a relatively low down payment. I have one investor who likes to buy single-family homes. We've done a number of these transactions. All of the homes were under $100,000, and each of them rents for about $1,100 to $1,300 a month. Now, you can either buy these in cash, and that's all income for you monthly, or you can buy these with just 25% of whatever, $75,000, $85,000, $95,000. You're talking about $15,000 to $25,000 as an investment, and you're going to start producing an immediate monthly return. Now, again, these are the kind of properties you're not going to really expect to see a lot of equity growth in, so you'll be lucky if you can sell it for what you paid for it, but what else is going to yield you that kind of money? If you have $75,000 sitting in a bank account versus $75,000 producing $1,200 a month, I think you're going to find you're getting a hell of a lot better return on that monthly. So, that's one strategy. Next time we will talk a little bit more about that and then move on to a couple other ones. You can always reach me at danbernal.com, dan.bernal@beangroup.com, or 617-275-3291. Thanks. See you next time.